Good morning. Welcome to day 11 of Momo in the sim. Yesterday we ended up down a little bit, ended the day red at 34 bucks. So far in my journey of rebuilding my metrics, we have about, let's see, so 10 green days and 3 red days. Part of the problem is that my 2 red days are bigger in general than most of my green days. Still up profitable overall, but we haven't really had any good headlines that have come out recently that have stocks holding up. Headlines that have come out, they popped up and then they've just sold off for most of the day, or they've ended up curling back up, going back up to high of day, rejecting, and then just going sideways. I may do a metric review this weekend because my accuracy has been pretty bad. So I need to figure out what I need to do going forward. And yesterday I was actually disciplined for the whole day, but right at the open with RECT, I ended up messing it up. Now, I will admit that I probably was a bit impatient and lowered my quality standard to take trades on this stock. Considering it was a $2 stock and a bit cheaper. And it already showed several rejections throughout the day. So probably best not to get in close to this rejection level if I can help it. But there were still opportunities on it, and I missed those opportunities. I was a bit too impatient to get into trades, and I ended up missing the correct timing. And then right after I left, almost immediately after I left here, within 5 minutes, the stock ended up popping up as I expected after bouncing off this 230 level. But there's nothing I can do now except try and learn from any mistakes I made. 7 a.m. So let's see what we got here popping up. BTBD popping up on the scans. Merger, strategic partnership. We have room up to the 200. I do like merger headlines. It's got significant volume. And take a starter at 220, looking for the squeeze up. Should be the second pullback. Stop is 215 here. I was 237. Pops up to 240. Take a little bit of profit up here in case it comes back down. Doesn't seem to be moving very quickly. I'm going to take the rest. There's a topping tail on the 10-second there. It's not moving very cleanly, so I'm going to wait for a proper pullback. I jumped in there because it has a partnership headline, and it was up a decent amount. Ends up breaking 250, comes back down. We need this to start pulling away. A little bit bigger of a sell-off than I expected. Now we have a big shooting star on the, I think this is a gravestone actually, gravestone doji on the 2 minute. So I could have held for a little bit longer up to 260, but considering how choppy it was here with this shooting star on the 10 second, after first, second, third pullback, it didn't really pull away. I decided to just get out and not take the risk. Because something like this could have happened, right? 260 all the way down to 230. But we have to see if it holds now. If it comes back up. Just a quick side note, I haven't mentioned anything about the other stocks on the scanner today. They're all either high float, not up enough, they don't have enough gain on the day, or they're too cheap. So this is the only one that I'm watching right now. There's no others that I really care about at the moment. All of them are outside of my strategy. So I'm gonna keep watching here. I was 269, pops up to 267 there, and does a double top. Coming back up a second time, bouncing off of 220. I'm just thinking about whether I should have held for longer, and I think the answer is still no. I got in back here on the first pullback, I believe, at 7, right at 7. And then it pulled back the second time after not really pulling away too much, and it pulled back a third time with the shooting star and higher volume selling. So I think it was the right decision to get out there, even though it continued going a little bit higher. At the time, can't foresee what it's going to do. See, this is the problem that I mentioned at the start of the stream is we have stocks occasionally popping up with news, but they don't hold up. Partnership headlines usually do hold up, but this time it didn't even hold up. This stock had potential too. We were in a window all the way up to 440, and then again up to 563. And then above 563, it would have been all-time highs, blue sky. We ended up rejecting 269. right after it broke this previous daily high, 250. We'll have to see if it curls back up or not. Not interested in it down here. Hey, Spooky. Yeah, it's been really cold. Um, it's been it's been a struggle. My accuracy has been terrible. I'm still up in terms of profit, but my winners have been like 50-50 with my losers so far. There haven't been like really that many breaking news catalysts that pop up and hold up. They pop up and just sell off. Yeah, it does kind of feel like that. Even in markets like this, you know, although the market is partially to blame, I always feel like blaming myself. Like there's got to be something I can do to increase my accuracy even in this cold market. And the solution that I've come up with, I guess, is just like Ross, just hands off the buy button. Wait for something that pops up, or wait for the opening bell, because the opening bell has sort of been working recently for me. But yesterday, even at the opening bell, I ended up with a red day. So see how long that works. Things have just been so choppy. I think that's the smart thing to do. And that's probably it is what I've been trying to do since yesterday. Last week I looked at my P&L and I came to the conclusion, like, yeah, I was green, but it was my profit loss ratio that was carrying me, like 1.5 to 2 profit loss ratio, even though my accuracy is only 50%. Like, it's still profitable, but could probably do better just sitting here, not doing anything until uh, stuff pops up with news that looks really good. And that's where most of my profit is coming from. Yeah, um until yesterday, where I had like 4 losses at the open. I had like almost 100% accuracy. I had like 90% accuracy on gap and go setups at the open. Like, do like I tag all my setups, right? So tag gap and go. I had gap and go, highest day squeeze, halt, pearls, and my VWAP setups. But I had like 4 losses yesterday. So my accuracy is only 60% now, but previous to yesterday, um, my accuracy was a lot higher. Uncheck this month. So from like 30th to April 13th. Oh no, April 13th, April 12th. Exclude Monday. Yeah, like 87% accuracy with one scratch trade, I believe, in a previous day. No, yeah, 87, 7-1. But like most of my profit in my tag breakdown, just overall, it's all like 5 day squeeze. So this is like mostly with news, something that actually breaks high of day. So if I'm just sitting here the whole day and I wait for something to break through high of day and I trade it, then that's most of my profit right there. Gap and goes. This was higher before I had the loss yesterday. It was like over $100. VWAP test. This is just like breaking news, trading the first pullback to VWAP. So all three of my highest profits so far are just like on breaking news. And there hasn't been too many breaking news trades. Like, I have one breaking news trade because I've been too scared to jump in them on the first pop. Or there hasn't even been very many at all. But the rest of it is just kind of like it's been losing for me. Curls have been losing, retests have been losing. Everything else has been losing. So my solution now is just like wait for breaking news because that's what I'm making money on. But because I've been trying to trade other stuff, my P&L looks like this. It's like it goes up, make a big mistake, slowly recover, and then make a mistake, slowly recover. It's rough. Rough trading anything without fresh news. Yeah, it's kind of like backwards thinking. Like when I first entered the trading scene, it was all about making profits. Like how do I find the perfect setups? Like how do I do that every time? But now it's just kind of like how do I avoid the worst the worst losses? As long as you can avoid the red days, then profit kind of just comes naturally. Because if you can learn how to avoid the red days in a cold market, then you can do that in any market. Yeah, I think part of it comes from his experience and understanding how to read headlines. And he, like, for example, here I entered BTBD because it has a partnership headline, and I felt like, those headlines have recently been working. Um, do I have that confidence to do that on many other headlines? No, but he can usually get a good feel for the market and what headlines are working and what's not. And if it fits like his strategy and how a price action looks to him, I think he's usually pretty confident in just jumping in. But at least that's how I see it. I don't. Sometimes, if even though I like a headline and I jump in, like it's better to trade the price action than the news. But the news is a starter, I think. It's like a decent starter to go off of, and if you see significant volume, like the first candle back here, was like 400,000. Immediately right after the news came out, you see increasing volume. I jumped back out almost immediately because I saw higher volume selling than buying, but you see increasing volume on a headline that you like, then gives you some more confidence to jump in. For me, that's like if I see over 50,000 increasing to 100,000. I haven't entirely figured it out yet, though. Yeah, he had 2 big red days in a row. I saw that. Now he's in extended trader rehab because there's been no opportunities that he likes. It's pretty impressive how he can reel himself back, though. Like now he's forcing himself to trade with 10,000 shares, and in the past few days, he's either had no trades or green, just forcing himself to stay disciplined. I hope it doesn't stay cold for too much longer, though. Who knows how long the market's going to stay cold for, because now uh, conflicts in the Middle East don't seem like they're resolving. The S&P 500 has been kind of coming back up to all-time highs, so I guess some people are optimistic. US oil has been coming down. But I don't know. What are you looking for before you start investing? So here's the thing with me is that when I first started trading, so I started trading back in July. That's when I first discovered it, and I discovered Ross. I played around with it for like a month from July to like mid-September. And some of the concepts, like I had a bit of an ego, I guess. I thought like how hard this could this be, right? And I jumped into Quest Trade as my first broker with like a very small account size, like trading 10 shares. And I just lost money on it. So I'm like, all right, well, what do I do now? So I decided to invest in some education. So I thought, well, maybe my education is a problem. Maybe if I invest in warrior trading and getting like a proper education going through the full course, maybe maybe I can make some money then. And so I did that. I took the free trial. I was, skeptical of Ross at first, but I decided that he was trading live. It was real. Like it was all good. So I did that. And after I completed the course within like 15 days. Like I slammed it out. And then I went back to trading with real money. And I lost again. And I'm like, all right, well, I got to go in the simulator now because I and losing money. And I did that probably 4 or 5 times, where I would go back to the simulator, go back to the simulator after blowing up an account, get some confidence, go back with real money, blow up an account, go back to the simulator. Up until um up until this year, where I decided to stop doing that, probably in January, because I just couldn't keep doing that. It wasn't a significant amount of money. It was like I was funding $1,000 accounts trading with 100 shares. Like, it wasn't very much at all. It's something that I could afford to lose because I have a job and I have a decent amount of income. But what I needed to do, I decided after looking at all of my metrics for those incidents, was I needed to focus on the downside risk. Like, I know the setups. I know the technical analysis very well now. I feel like it's just my discipline was the part that was lacking. So right now I'm using the simulator as a kind of a control, and this is the first time that I'm actually trading with breakout or bailout mentality. Like, I set my stops for a lot of my trades at like 5 or 10 cents. Before, it was like at 20 to 30 cents. And sometimes I would end up holding and hoping. If it goes down more than I intended and it ends up being a big loss, it would kind of trigger me. The simulator is my control right now for doing my strategy the way that I intend to do it, figuring out what's working, what's not. And once I'm confident in my strategy and with building this habit of this breakout or bailout, which is working right now because I have 1.5 profit to loss. With certain setups, I have like a 2.0 profit to loss. But I'm finding now that my accuracy is taking a hit because my accuracy was higher before because of my stops were bigger. So now I have to be more precise with my entries. And kind of taking this risk-oriented mindset is what I call it, is forcing me to improve my stock selection. It's forcing me to improve my accuracy, and it's forcing me to build good habits by having good entries and having tight stops. So what I'm looking for before I go back to real money is I can build up my accuracy a little bit more. I can maintain this high profit loss ratio and have this habit built where I just cut my losses instead of holding and hoping. I was thinking of going back to real money soon because I have been, but considering how the market has been, I don't really want to go back to real money when there's nothing moving. And there's this, this tension in the Middle East that who knows what's going to happen to the stock market and whether or not there's going to be more activity in the near future. So I'm kind of just in limbo right now. I want my accuracy to go up a little bit, and I want my profit loss ratio to be maintained. And if I see that for an extended period of time, maybe in like the next few weeks, then I might go back to trading with real money with 1,000 shares and see if I can maintain that discipline. The PDT rule change is also exciting because I live in Canada and I don't have many options for brokers. So I might be able to use some of the better direct access US brokers like Lightspeed or some of the other good ones. This is a biotech stock up 50% on the first pop. I don't like how it has that high volume selling again though. So yeah, that's another factor. The PDT rule change too is I don't like Trade Zero very much, but it's basically my only option other than Quest Trade. But Quest Trade doesn't even have like proper keybinds. There's Centerpoint Canada, but I need a $25,000 investment to use that. But I'm interested once the PDT rule changes what brokers I'm going to be able to use, because I'm not going to have to put in $25,000 anymore. High is 30, but the stock is a bit cheaper. The daily doesn't look that great. So we're breaking. This is a good headline. FDA approved phase 1 clinical trial. But I don't like these topping tails, making me nervous, and the stock is a bit cheaper. It definitely makes me feel more emotional. But part of the reason why I was failing before is because I was trading from a place of not scarcity, but almost like time constraint. I felt like I wanted success as soon as possible, as quickly as possible. And every time I would enter into a failing trade, it was like me denying reality, right? Like this is not something that's going to happen in a short period of time. Like you can't just enter trading and be successful in a couple of months or a few months. And by now I've kind of accepted that it's going to be more of a long-term project. And the reason why I was trading from that mindset before is because of my job. They wanted me back to the office 3 days a week starting in October, whereas it was remote work from COVID. So I was like, well, now that's going to affect my trading, right? Because I can't trade with my desk beside me and be here like until the open every day. And I can't, like it's going to affect my profits and stuff and my ability to gain experience in the market. So I felt like, well, when I first started in September, I was like, well, I want to be good at this by October. And that didn't work. But the deadline passed, and then they're very lenient about it, so it didn't end up being a big deal. But now, like after that announcement, just a few months later, they're like, oh, okay, well now we're gonna make you come in 4 days a week in like July of 2026, like in a couple of months. And it is possible that in July I don't end up having as much time to trade because I have to leave and commute. Like I'll have to leave early by like 9 to go commute. So that's part of what was affecting my mindset. The money, not so much, but it's more or less like my perfectionist type personality. I would enter into a trade, it would reverse, like, or it would jackknife, and I would sit there staring at it like, how could this be wrong? Right? Instead of immediately reacting, my mind will immediately go to processing like how it could have been wrong. So a bit of stubbornness, a bit of holding and hoping, a bit of trading from like a scarcity mindset in terms of time. kind of like I guess it's the pain of being wrong. That's what it is. And it's funny because when I first started trading, Ross has that whole section about trader rehab. Uh, and I just kind of ignored it at first. I'm like, I don't need this. Like, I don't get emotional about things. Like, I'm usually a very chill person and I don't get emotional about a lot of things. But it's, the longer I trade, the more I realize that having a risk oriented mindset and having a discipline oriented mindset to not let your emotions affect your actions is actually like one of the most important things. Whereas before I just kind of shrugged it off. I'm like, like I don't need to do this. What is this? Yeah, exactly. Pride will get in the way of you just taking the loss and accepting that you were wrong. And I did a deep dive into like risk reward analysis and like the benefits of cutting quickly and having a risk oriented mindset. The reason why holding and hoping will never work in the long term is because of your downside risk. Like right now, what I'm doing has been confirming to me just how important profit loss ratio is in cutting losers quickly because I have a 50% accuracy right now. Like I could just be throwing darts at a dartboard right now with my accuracy, right? Without a care in the world. As long as I'm entering into the correct stocks with generally the right setups, I'm getting some right, getting some wrong. But the fact that I have a 1.5 profit loss ratio means that I still come out profitable. But over the long term, with holding and hoping, like let's say I get in at 2 on this stock, usually stocks at $2 only move 10 cents, 20 cents, maybe 30 cents at most. So on average, maybe you get 15 cents out of it if you enter at 2. But if I enter 2, it rejects off VWAP and I hold all the way down to 150, waiting for it to come back up off the lows. My downside risk is 50 cents, but my upside potential is only maybe like 15 cents. So when you get that inverted profit loss ratio like that, like 0.1 to 5, right? Or maybe it's like 0.1 to 4, probably be more realistic in that sort of scenario. And you need a 80% accuracy just to break even, which is impossible. Like you can't, it doesn't work because with that kind of profit loss ratio, that means that I could be right 8 times. Like I could enter it 2, wait for it, uh, like 4 times. Sorry, not 8 times. I could enter it 2, fail 4 times, and it comes back up, and I'm right. And like, okay, well, it did end up coming back up 4 times, but the one time that it doesn't is the time that it wipes out all of the profits from those previous 4 times. Or if I have two losses where I wait for it to come back up. And I'm right 3 of the times. Well, I'm still down on profits even though my accuracy is 60%. Or 3 out of 5 is, yeah, that's 60%. But you're still down. Like like mathematically it doesn't work. So that's like my logic speaking to me and trying to stop that habit is that logically speaking, and mathematically speaking, like holding and hoping is just, it doesn't work. Yeah, buying into support for sure. I agree with that. Thing about buying into support too is that it gives you a clear stop, right? Maybe not like for me, what has been working for me in maintaining like a bit of a better profit loss ratio. Let's take the example of entering in at 2 again on this stock. Not really anything else I'm watching right now, anyways. I'll put BTBD on a side chart in case it curls back up. We're just waiting for news anyway. But say I take the example of entering at 2. I might enter in at like 205 or 206 because half dollar or whole dollars are generally like levels of support. And I would say, okay, 5 cent stop. So my stop would be 201, which is, it's basically support, right? But I don't really put my stop below 2 anymore, like below levels of support anymore, because then you're getting out at capitulation. Like people will set their stop orders here or their stop limit orders here. And the moment it breaks 2, the moment it drops down like an extra 5-10 cents sometimes. So I get in at like at levels of support, but maybe like a few cents above after I confirm that it holds. And I'm like, all right, well, my stop is it's breakout or bailout, right? Like either it goes up here or it doesn't. If it goes up, I give myself like a few cents to move. And if it drops back down to 2, then I get out before it breaks that level of support. And usually speaking, if you get in around support, sometimes it, if there's enough buying volume going into where your entries are, like it makes you more precise with your entries doing that, because you're not relying on support to save you. But if you're buying close to support, a lot of other people are also going to be buying close to support, right? Because they're thinking the same thing, is that they're close to a level that kind of protects them. So there's going to be more buying volume off of it. But I don't really like rely on support for price to bounce off anymore. I do a little bit sometimes if I'm more confident that the trade will work, even if it bounces off. But I try not to wait until support breaks anymore, because most of the time, like I went back through all my archives and stuff, and I noticed that the best trades that work, they work right away. Like you get in at 205 and it just goes up to 240 like immediately. And it doesn't even come back down and touch support if you're right with your entries. Unless you're on like a breaking news. Sometimes there's like too much volatility and it will come down and touch support. On breaking news, like really volatile setups, then you do need to give it a bit more room to move. But if it's like a bull flag, high day squeeze, or VWAP setups, then that's what's been helping me a lot. Yeah, for sure. Sometimes like exiting out as it like after it breaks support, it just plummets. And if you're trading with real money too, it's even worse, because sometimes you don't get your order filled if it's plummeting so quickly, and you're getting slippage on the exit. So mathematically speaking, you might set maybe like a 10 set stop below support. This is what I was finding before, is that you set a 10-cent stop below support. It breaks support. You get out. You try to get out at like 95. You end up getting filled at like 90 or 85. So now your profit loss ratio is even worse if that regularly happens. If that happens in all of your trades, you might think that you have a 10-cent stop, but you actually have a 20-cent stop. So if you take profit too early on all your winners, like if you take maybe 15 cents of profit on average on all of your winners, but you end up getting out like 20, 25 cents on all of your losers, then you have an inverted profit loss ratio. You have a negative profit loss ratio, and then you have to be even more accurate just to break even. So, yeah, in a hot market, there is more volatility, but there's also more upside potential. So in a hot market, you can have a bit bigger stops, like 10, 15, or even 20-cent stops sometimes. And you can still be profitable because the stocks that you enter sometimes can go up $1, $2, $3 a share. So you can still have a decent profit loss ratio even with a stop of 20 cents. But in a cold market, if your average winners are only 15 or 20 cents because these stocks aren't moving as much, there's not as much buying volume, there's not as much upside potential, it's that much more important to keep your tights, your stops tight, not get in, or sorry, not get in, not exit the trade when there's already capitulation. You're going to get slippage on your order to the downside. That's what I've been finding in these cold markets. So yeah, I agree with you. The downside in a cold market is a lot worse. A lot more people are like scared. Yeah, yeah, for sure. I agree with you. I know what you mean. It can be a little bit awkward. Um, Sometimes like doing what I described, getting in at 205 or 206 right as it breaks and you can see it hold. I like that setup too. I think that's what you mean is that it breaks and then it slightly pulls back for a second and then you get an opening to get in after you see it holding. Like I really like that setup too, and that's generally what I look for in a lot of these 5-day squeeze, breaking news setups, if possible. But sometimes it breaks, and in a cold market, because there's so many short sellers, sometimes it'll break and they all cover and it'll go up like 30 cents. And so if you wait for the break, then you're getting in too high. But if you get in for the breakout before the break and it rejects, then you're stuck in a jackknife. So it's awkward sometimes. In a hot market, I can be more confident about getting in on breakouts, getting in before breaks because they'll work more often. Like they'll usually break in a hot market, but in a cold market, yeah, it's a bit awkward. Yeah, because of all the short sellers, sometimes they just cover when you're not expecting it. So it pops up and causes like an arbitrary catalyst. It doesn't really make any sense other than the fact that this is where a lot of them are setting their stops. Or like they're ending their trade. So like it might sell off for a while, come below VWAP, and then kind of go sideways for a little bit, and then they'll, okay, time to cover, and then it'll pop back up. But that doesn't mean the stock is strong. That just means that they're covering, and then it pops back up for a little bit, and then goes sideways, comes back down. Yeah, it's very, very weird. Six minutes to 8 a.m. Hopefully we don't have another day of just sitting and doing nothing the whole day. I was happy that we had something right at 7 a.m., but it just ended up selling off. Like another kind of partnership headline here. It's CHAI, but it doesn't have volume. Yeah, there's nothing even to watch. But yeah, going back to my trader view here. That's the other struggle I'm having. All these penny stocks. I don't like trading penny stocks very much. We'll trade them if I have no choice sometimes, but they're not my first choice. Yeah, I don't know, but they have been kind of pushing in the past couple of days a little bit. But yeah, so overall, like 1.5 to 1 profit loss ratio. Winners, I'm holding my winners 2 minutes longer than like double the time of my losers. So this is what's been carrying me, I feel like, in this cold market, even though my accuracy is just crap. It's 50-50 right now, basically. I had a cumulative drawdown pretty big on my max loss day there. Yeah, the last stock that we had that went up a lot that wasn't like grinding was ARTL on the 27th. That was like the last day that we actually had something good. I made money on it, but I feel like we haven't had anything that good since then. I definitely missed some opportunities, but yeah, 49 to 49 with one scratch trade. It's basically 50-50. With certain setups, I've had higher accuracy though. Like if it's just high of day squeeze, gap and goes, and like halt resumptions, breaking news. Like I have a 60% accuracy on those setups. That's not that bad. With almost a 2-to-1 profit loss actually on those setups specifically. So it's like these are the setups to trade, I guess. All these other setups are like curls off the low. All of these are VWAP setups. So they're kind of like curling setups, except for VWAP test actually. 60%. Yeah, I didn't include that. 60%. The rest of them are all like you're trading curls or like the backside of the move or stuff. Sometimes it's not breaking news. So, I mean, been kind of doing okay. The problem is that I was trying to trade curls and other setups that just weren't working in a cold market. But back to charts. I feel like pennies, even without a commission-free broker, I feel like pennies are profitable. Like you can trade them up to a certain account size. Ross doesn't like trading them because he can't. In order for him to utilize his account size, normally he has like a $300,000 account size. He would have to take like 150,000 shares, and he would get slippage on his entry and exits. But if you're trading with like a $10,000 account size, then you might take like a 5,000 share position. Most of these penny stocks, there's plenty of liquidity to deal with a 5,000 share position and not really get too much slippage on your entry or exits, because most of these pennies are trading with like 3 million shares in a 1 minute candle, the ones that are really good. If you can make 10 cents on a pop on 5,000 shares, it's like $500. Like you can use penny stocks to build accounts. It's just at a certain account size, you're no longer making money on them because you have to take so much share size, and you're also getting slippage. So between slippage and commissions, it's kind of like the bigger account size you have, the less money you make on them. But the reason why I don't trust them as much is because supply and demand. On penny stocks, there's more supply because more people have the capital to buy a large amount of shares. So even if the float is like 1 million, they're usually very thickly traded because people are constantly getting in and out with large share size just to make a few cents. And sometimes short sellers can accumulate very large, they can borrow very large positions, and then suddenly the stock goes down like 10 cents because someone puts out a million share order or something. Maybe not that big, but like, like a few 100,000 shares is no problem for like a big hedge fund or for somebody with a bit more capital that's willing to dump it into a penny and cause it to go down. If you have a $5 or $6 stock, they can't really take that big of a share size without taking more risk. 100,000 share size is like $500,000 on a $5 stock, whereas 100,000 share size on a penny stock is maybe only 100 to 150,000. I don't trade. I don't like trading pennies as much because of that reason. Sometimes I intend to get out with a 5 cent stop, but it goes down like it can go down a lot quicker than it goes up. I don't know what the news is on this. Does this have news? 25%. Hmm. I remember this one being a big mover in the past, up to 32, and it just sold off. Got a bit of a higher float though, 5 million shares. Only up 25%. I don't know what the news is either. Yes. Uh, yeah, I do think that. My requirement for jumping into any stock is it needs to be up at least 20% on the day. So Ross, in his 5 pillars of stock selection, I believe he says that it needs to be up at least 10% for him to trade. Mine is double that. Like I only trade stocks that are up at least 20% because 20% puts it in the top 10. Usually, if you look at the top 10 gappers for the day, unless it's like a really, really hot market, 20% will put it in the top 10. And if it's just like barely holding 20, then I might just ignore it. If it's like 10% and moving quickly, like it's about to be 20% or 30%, I will still jump in, but I prefer it if it's up 20%. And if you notice, like a lot of the really good stocks with really good headlines, they'll pop up and immediately be up 50%. So when I'm looking at jumping into something, the bigger the percentage gain on like the first pop and how much volume it has and how quickly it's moving, those are the things that I'm looking for. If it pops up 50%, goes up like 100%, and it's suddenly the leading gainer on the day, then it's like, yeah, here we go. It's game time. So percentage change, volume, it is still it's the 5 pillars of stock selection, right? Like Ross's 5 pillars. Float, like I'm looking for low floats in a cold market. I don't trade anything above 5 million shares of float. So those are the two biggest factors. Well, I mean, all of the pillars of stock selection are important, right? It's a low price or too high of a price, then it's too risky. If float is too high, then it's too risky. If it's not up enough on the day, it's too risky. I feel like all of them are pretty important. So we're breaking previous high, but it does have news. Definitive enter over 1 trillion US prediction markets. I don't know. I don't know how significant this headline is. People don't seem to be reacting to it particularly excitedly. Operator today announced it as definitive agreement with crypto.com. For third-party estimates, U.S. market opportunity could exceed 1 trillion annual trading volume. Da 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 da. I don't know. Don't know if this one is worth it. Hmm. Keep an eye on it anyway. Yeah. So I agree for sure. Um, Usually they are the leading gainer, the ones that I'm trading, or like top five leading gainers. And most of my profit for sure does come from stocks that are up over 100%. I don't know. I think I'm going to leave ROLR alone. It's trading very choppy. It's not really pulling away. Like it needs to pull away here. Like first pullback goes up like 30 cents. Second pullback goes up 30 cents. I don't know. This would have worked a little bit, but I don't know. So like I have percentage gain actually is one of my tags. So I tagged the percentage gain the stock was at my entry points. So if you look at my P&L for tags that I make the most money on, I make the most money on floats over 1 million shares, right? Like that makes sense. Supply and demand, um, up over 100% with fresh news, right? That all makes sense. I haven't had sample size isn't that big. It's like 60 or so trades, but next one is 3 million. There would be a 2 million if I had more sample size. There just haven't been too many 2 million share stocks, right? I don't know why I'm losing on 1 million share stocks. Not big enough sample size, but I mean, this stuff all makes sense, right? If it's up over 100%, it's going to be the leading gainer, or at least in the top five. This did end up working for the first, second, and third pullbacks on the 1 minute. I just wasn't confident about the news. Like crypto has been going down pretty steadily. Like Bitcoin since October has been down over like 50%. So I kind of thought that these crypto headlines were over. Back last year, the crypto headlines were working really well, but Hmm. Too extended for me to get in up here now. I would have to wait for it to back. Do a 5-minute pullback maybe. See what happens here. We can form a 5-minute pullback with a pullback to the 9 EMA and VWAP here. Probably be better to get in. It is up almost 50% now. I still don't like that it's 5 million share float. It's like at the very edge of what I'm willing to trade in a cold market for float size. We'll see. Hmm. It's quite the spike there. Double top at 8. Breaks through. I don't like how it popped up to 20 and dropped back down though. Hmm. I feel like it's too extended up here now. Like I don't don't have the confidence to get in up here when there are 4 or 5 minute candles in a row. 23,000 share seller popping up at 8:30. And according to my usual theory, right, this is first, second, third, and fourth pullback on the 1 minute. I feel like this should be the top here. I want to buy the top. It just keeps going higher. Hmm. Well, if it keeps going higher like this, this one surprised me that it moved this much. The best place to get in would have been back here on this first pullback, this first test of VWAP. And probably could have sold at 86 and held all the way up to 8 here. I guess I was wrong about the news. No, I can't get on. I can't get in on this up here though. It's too risky. So this should be our first proper 5-minute pullback. I have to be careful here though, because this is where the emotions start coming in, right? I was wrong about this back here, thinking that it's a crypto headline, probably not going to work, 5 million share float, but it ends up going up 80%. Now have some feelings of FOMO and that pride earlier, right? Watching something go up 80% without getting a trade on it. I have to be careful to look for proper entry. This 5-minute pullback. I have 62. I guess if I thought about it in another way, it's a prediction markets headline, which would make more sense as to why it popped up if you think about it as like prediction markets over crypto. MACD's crossed over. 25 seconds left on that 5-minute candle. I have 62. It is 8:30. We'll see if there's any other news that pops up and takes volume away from this. PST popping up. $4 million share float, $5. Not selling off. RLR is probably taking too much volume away from it. We break through 85 here. Bounce off 10. MACD was still negative. That pop there. A minute left on that 5-minute candle. I have this candle is 975. kind of forming a little bit of a cup and handle here. Pops up close to 10, comes back down, curls back up. I may look for a squeeze through 10 if it pops up again. See though. A little bit chilly in my room. See what happens here. 2 minutes left on the 5-minute candle. Holding the 9 EMA on the 1 minute right now. Still negative on MACD. If we break 10 though, I feel like we're gonna pull away here. $50 left on that 5-minute doji. got a seller trying to push it down. I feel so chilly down here today. Ugh. So we're just hanging out waiting for it to come back up. We'll see if it comes back up and breaks through 10. Previous low back here, about 877. I have that 5-minute candle is 950. It's a minute 20 left. Oh man. It is a shame that I missed the moves back here. Hmm. Is what it is, I guess. I'll have to keep in mind prediction markets as a potential headline. We're bouncing off 876. We continue to hold and we form a hammer on the 5-minute, then we might come back up and retest 10. Popping up there. Of a topping tail. Curling on MACD a bit. So since I said I wouldn't trade curls, I have to wait for it to come back up for a 5-day break. So if it gets close enough to 10 that it looks like it might break, then I might consider getting in, or I could wait for it to actually break and hold 10 for me to get in. This is our third leading gainer. The other two are pennies with higher floats. We'll see what happens here. 30 seconds left on that 5-minute candle. If I were trading this curl, I would get in for the break of 950 here with this high of this 5-minute candle. Rejects off of 950. Why trading curling patterns in this market is very difficult. Why I am not touching it right now. What happened with my scanners? Or your trading scanners just shut down randomly? That's weird. I gotta fix it now. All right, it's still fine. Give me just a second here. I'm gonna let my dog outside, or my dog upstairs, not outside. We're just chilling, waiting to see if this thing comes back up. It's almost 9. See if we have any 9 a.m. news or what this does here. MACD's close to crossing positive. Oh. So if we cross positive on MACD and break 960 here, then we have a good chance of retesting high of day. We pop up there. Thirty seconds left on that 5-minute candle. We break 10 momentarily, but reject off of it. Oh, we have a big jackknife. Here's a good example of why curling patterns haven't been working. Damn, I was hoping that it would break through 10 there and go higher. And I wouldn't feel so bad about missing the move, first part of the move. And I could trade the second part and say that I at least got some trades on it. But with that jackknife, now it becomes very difficult to trust. I don't see any 9 a.m. news. Hmm. I guess last chance 9:15, and then we'll have to see if this holds for the open. Best case scenario for ROLR at the open for me to be able to trade it would be a red to green move from 876 back up to 10. So if it sells off, comes down, fails to break below, comes back up, forms an entry candle, that would be the best case scenario. Considering this jackknife up here at 10, I don't know if I would get in for a high of day break of 10 on the open. I'll have to see. The third option would be if it holds the 9 EMA on the 2-minute. And right at the open, it forms a nice entry candle and buy the first candle to make a new high. Still got 24 minutes to the open though, so we'll see what happens in the meantime. Previous high of day, mark that 10-11. I just have Ross stream up on the side, and he just talked about how he doesn't really want to take a trade on RLR at the open because of this jackknife, and that he doesn't have enough cushion on the day to want to do it because he's still in a drawdown. And he wants to just chip away at that drawdown because it's still slow and there's not too much room to make losses back at the open. It is an interesting way to think about it. It could be possible for me to just take this $13 green day and walk away and not risk trading the open. May leave some profits on the table, but it may also keep me from going red on the day like I did on Monday. Yesterday, it could have been a no trade day if I had just walked away at the open instead of trying to trade. That being said, there have been several days in the past couple of weeks that I've traded at the open that have either turned my day from red to green or red to break even or have gotten me green on the week. So I'm not sure what stance I want to take on this yet. I feel like I need more trades at the open to really decide trading at the open for gap and goes is going to be worth it in the long run, or if I should just leave them alone like Ross does. I've been having success with them so far, so while I'm still in the simulator, if I see a good setup, I might enter anyways. I am trying to treat this as though I'm trading with real money to make it as simulated as I can, as realistic as I can. We're coming back up to 10 here for another retest. We break through. We hold, so I'm going to take a small starter looking for the breakthrough 1050. That was about 10, 1015. Break 1050. I'm going to hold. Assuming that this is the first pullback after a fresh breakout. I was 1070. I really like how it's stalling out up here, so I'm going to take the profit. It's going to book the profit. And look for a breakthrough 1080. Low of this last pullback was 1040. High of that 1 minute candle. That 1 minute candle is red now, but 7 seconds left with a high of 1073. We're bouncing off 1040. We break down there. So I took the trade when I saw it holding 10. I waited a little bit longer. So I ended up getting a little bit high at 1039, but I just wanted to see it hold first before I got in because of that previous false breakout, that rejection. So I wanted confirmation. Pay a little bit for confirmation, but that's okay. Took smaller share size, 37 shares. That's what I should be taking above $10 because at higher risk. So it comes back up to 1060 here. Does it break back through 1080? $50 seconds left on that 5-minute candle. Forming a bit of a hammer right now. Slight ABCD pattern forming on the 1 minute. The high of 1078. So do we hold 11? We hold 11, so I'm going to take a position like this, squeeze up to 1150. I don't like how we break down there, so I'm just going to get out. Almost back to flat on ROLR. So this thing isn't trading very, very easily at all. It pops up, goes sideways, pops up, now we're going sideways again. We are holding the 9 EMA on the 10 second. Break 1125. We hold, so I'll take a position looking for the squeeze through 1150. Stop is 1125. I don't like how it's not pulling away, so I'm just going to get out. It's so choppy that I don't trust it. I think I'm going to take my hands off it and just leave it alone now. Because right there on that breakthrough through high, it should have moved more immediately. It might pull away now, but I can't trust it anymore. For a $11 stock, it should be moving more than 20 cents at a time, 20, 30 cents at a time. It's very thickly traded. It's odd. I guess because it's a 5 million share float, it's a bit of a higher float. Like if I held on for a little bit longer, I could have got up to 80 cents, but now we're dropping back down again. I think this is hands off for me now. The cleanest part of the move was back here, the first part. Second part is pop, sideways, pop, slowly grind up, come back down. And now we're a bit extended for me to trade the open. Like if it's only going up 20, 30 cents at a time, it's difficult for me to trade like 37 shares and make money on it. With $11 stock and an actual $1,000 account, I mean, I could take up to maybe 70, 80 shares. But and I would be trading with full size. We'll see what happens here at the open, I guess. We're bouncing off of the 9 EMA on the 2-minute. which is the level it was holding previously. $30 to the open. I have that 5-minute candle is 11:39. So I might consider a gap and go at 11:40 for the break up. Or maybe even like 11:25. We'll see what happens here. Alt is at 11:56. Alt moved up to 12:36. That is good. I'll take a position stop of 11:50, looking for the squeeze up through high of day. So I have to get out here, unfortunately. Wait for a re-entry. I have that 1 minute was 11:74. We're bouncing off of 1050. At the 2-minute candle is 11:20. Take a position here, looking for the squeeze up. Up is 11:25. All right. Flip from red to green on that rejection. From green to red. Now I have to stop. Oh man. So what I was thinking there was we only had 5 seconds left on that 2-minute candle. If we broke through there and we continue to go higher, or at least held, then we would have had a dragonfly or a hammer on the 2-minute. And we would have punched through 12. Now I have to reconsider whether or not gap and goes are working for me, because now this is 2 days in a row where I'm losing on gap and goes. I had 8 trades that were successful. Could have been just luck. I was thinking that this was a red to green move here, though. Came back down, bounced off of 1150, this level right here. And we had a bit of a hammer on the 1 minute, had a hammer forming on the 2 minute. And the 5 minutes still had a few minutes left to close. So I thought, since we punched through 1150, that we would have a move up to 12. Considering the timing of the fact that the 2-minute was like 10 seconds to close. I'll have to go back and look at the VOD to see if I held this longer than I intended, if I had hesitation, if I could have gotten out at a better price. I think I might have done a little bit of holding and hoping there. Or selling off. So it fell down all the way to that 986 level and bounced off that previous level of resistance back here. Well, if you break back up through 1050, you might see a move back up to 1150 at least. 20 seconds left on the 5 and the 2-minute candles. MACD is negative though. Uh, So it bounced off that level there. So this would be a red to green move for breakthrough 1050. Two minutes left on that 5-minute candle. It'd be more of a curling pattern now, but seconds left on the 5-minute. Continue to hold. Rejects off of 1060. So we bounce off the lows there again. It seems like we're failing to break down any further. We might have some capitulation here because it's a double bottom now. Now it looks like we're just selling off, unfortunately. So all right, well, considering what to do here, I think that since I lost money at the open 2 days in a row, now my accuracy isn't looking particularly good for gap and go setups considering today and yesterday. Could have just been beginner's luck. I'm not as familiar trading gap and goes as I am with breaking news setups and high of day squeeze setups. Perhaps the best thing for me to do would be to go back to basics, do some trader rehab, and not trade at the open. Today, if I had just traded BTBD and gotten that trade on ROLR, where I was at my peak of 25 bucks, which was cold market daily gold today, then I would have been in a good spot to continue yesterday. But now that I'm down 20 on the day because of trading ROLR at the open, now I have to do some trader rehab. Two red days in a row. So drawdown of 56 bucks, I think, from the past couple of days. I pulled up my metrics earlier and I showed that I had a 60% accuracy after losing 4 times in a row yesterday. But today, losing several times in a row in these gap and go trades, maybe it's best to take a step back from them. Pay attention to them at the open, but not trade them to see if they're worth trading or if it's too volatile. But back to basics, I think high day squeeze, breaking news, and VWAP tests, which are the pullbacks like the ABCD bull flag. The stuff that Ross normally trades. I don't want to go further into the red today after going from green to red. I have to end it here. So the plan for tomorrow is I'm going to come back and I'm only going to trade A quality setups with breaking news cover from the drawdown, and we'll go from there. I have to improve my accuracy by quite a bit. And I think the way to do that would be to trade breaking news setups. All right, that's going to be it for me. I will see you guys tomorrow. Take care.